Okay, hello guys. Hello everyone there. So, it's been about 3 weeks since the last upload, and I told you that I'm trying to do this the upload strategically. So, the Eurusd Forecast on November 23. I explained. Let's just run that by here.
Of shorter time frame.
Okay, so I plotted those lines and told you what's going on. I told you there was a gap here.
This entire region here, top side of that region, it would be about.
And then most likely, and then it will play this gap, and it will either go to this point here or to this point down here. So we'll stop right here, and we'll see what has happened with that. So as you can see, this is the H4 time frame. These segments are in weeks, and okay, this is the old one that I used in the video. So this is the gap here, and this was the original day. You can see that that day is very far away. The original day that this prediction was made was on this day here, which is November 13. And I think it was a couple of days or a few days after this actual day here that I started using the lines. You can tell that the price, this was the decision zone, where basically the do nothing zone. If it's on this side, I'll just decide to buy, this being the stop. If it trades under this, then I'll decide to sell. And likewise, if it returns, then I'll decide to buy. So you can see that it used this zone. You would have traded, used it as a support ultimately, and it would have traded as a buy 1, and as a sell 2 times, and then as a buy again 3 times. So you would have entered and changed position 2 times until it finally decided to use that as support. And then continued for the remaining days until the current position where it's at, so this uptrend. So it used this as support in the uptrend. So that's those are the 24 hours. These are week ranges. You can see the same thing here as week ranges. So it used this range as a support. Now what's going on here is that these are trend lines. They're average trend lines. So standard deviation lines, actually. So they're measuring the average price for a range of time, and this line here is the average chart space for average price of the chart space for the H1 and for the M15. So you can see that it used that as a support to whatever decision it wanted, and it wasn't going to be the lower price, this lower price here, this daily average price. It is working towards a longer term than that, the weekly average price. Now, it's possible that the reason why it's working towards that, the weekly average price, even though that's a longer range than the daily, is because that average price is closer to it, so it is more strongly attracted to it, and that's the only reason why. So what will happen after that is we'll use it as a resistance down to the shorter average price, the daily. So if we look around, are there any other average prices above that on other time ranges? We only have shorter time ranges here. We don't have any longer time ranges. So the weekly is obviously the longest, one of the longest time ranges. We do have the monthly, which I don't think if I zoom out completely. In fact, I don't even have, I don't think I have a monthly range on here. I should probably put that down. Okay, so here is the monthly range. So it's possible, yeah, that it goes to this, that the next place it goes after the weekly, if it gets over the weekly range, it will go to the monthly. average price. But that's how we use these gaps between the averages to determine where it's going. So currently we have it on a trajectory to that weekly, to finish the weekly target. So I did not move this target. I set this target 3 weeks ago. These lines will adjust slightly because of the price movements over the 3 weeks, but I didn't adjust the target itself because of that. And we're about 70 pips away currently from that, from the target, from hitting the weekly average. So that could complete today or tomorrow. But since I also have, so what I did is I moved the stop up here from, have the entry here, right? You can see the entry is here. It's where I would have gotten in at the cross of the buying on this support here, this price average divergence. And the reason I put a stop here is because I redrew the lines, because we're so close to the weekly target, that I redrew the lines, and you can see that the weekly target still exists even with the redraw of the lines. So that target's not going to change. This is a very strong resistance or support if it gets on the other side. So anyway, that's the target. It's not changing, but the shorter term price averages have significantly changed, structurally changed. So I drew these yesterday, and you can tell that, I drew it yesterday on here, but you can tell that the price stayed on this side. It stayed in the boundaries of these averages, and this is specifically the M15. So you can see how the price was supported on the average of the M15 price average, and it broke above the 1 minute average and the 5 minute chart average. So this is indicating that it's continuing its upward trend. It's supported. There's no break of the downward trend, the downward side, downward averages. You can clearly see that here. It is making a little bit of movement currently. So if it does break this, then I will stop out of this, because I have a good amount of new structure, newly drawn structure, because of this gap here. This gap provides a new decision zone for me that I can use. And so what I'll do is I'll trade this to either hit this target here with this as the decision gap and a stop under here, this as the target, or if it trades under, then I'll use this as the target and this as the stop, above this gap as the stop. And so we can see it's currently doing something like that. It's currently deciding to do something like that, and I'll just keep moving this. I'll just move that up to, in fact, I'll put it right there. So it looks like we may just be exiting now. And if it does, I've made about 180 pips from that, 180 pips in 3 weeks. So the point is to show the logic of this strategy and the result of the last 3 weeks. That's it. Thank you.